All right, all right, all right. Good morning, ladies and gents. Good morning, ladies and gents. We're gonna make this real simple lesson. Nothing too crazy. We're still at the beginning of all the lessons that I'm gonna be going over as we go through all these days, all these weeks for the rest of the year. So we're gonna first start off with all the basics like we already have been. First video we did a whole rundown, binary, options, and Forex. What's the difference between the two? We did a whole rundown on that. And basically the gist of how some of these platforms work. And then if you remember last week, we went over SRTs, support, resistance, trend lines. We went over that. cover briefly the drawing tools. We haven't gotten to the indicators yet, but we're going to get there next. It is important that we do talk about consolidation and trending. So we're going to run that first before we continue the rest of the drawing tools and before we continue the rest of the indicators as we go through all these different lessons. So if you're here, great. If not, you can always catch the replays, but I go live on weekdays, Monday through Thursday, within the hour of 11 a.m. Eastern Standard Time and 12 p.m. We're running a little late today. Had a couple of technical things to handle, but we're good now. So we're about to start. So get ready. Get ready to take notes. Once again, take copious notes. Note takers are money makers. All right, and we're going to begin. All right, we are going to begin. And make sure my controls are good over here. All right, and here we go. Here we go, ladies and gents. We are officially live. Let me take some of this music down. All right, and for playback purposes, I'm going to redo the introduction. Hello, ladies and gentlemen, beautiful people. Nes Vquez back on the line. Always an honor and pleasure to get on with you. And my goal is that out of a lot of people watching, that there are a few of you that is actually going to take this the extra mile. We went over quite a few things. Okay, first time we did the rundown, binary and Forex. We did the rundown exactly what are the difference between the two and what are the advantages, things like that. And then we did some chart time. We spoke about support, resistance, trend lines, right? How to look at a tradable asset or a symbol or an instrument, whatever you want to refer to it. How to look at it from a bird's eye view, from a 30,000 foot overview, right? Looking at what the market has done with these assets over the course of the last 50 years or so. We know that the Forex market used to be a fixed exchange, right? Forex, foreign exchange, used to be fixed exchange rates. And this is prior to 1971. When we, look into the US dollar's history being backed by gold, the dollar was taken off the gold standard. Okay, because inflation started to happen at a very rapid rate, meaning that our currency is supposed to have the assurance that we are somehow backed by gold. We was backed by gold prior to 1971, but, as I said before, once other countries wanted to trade their dollars back for gold, the U.S. lost half of the gold in its reserves. And so Richard Nixon took the U.S. dollar off of the gold standard. And ever since, the dollar became a floating exchange. The rest of the world followed suit. And so now, instead of having fixed exchanges, let's say if you wanted to exchange the Deutschmark back then before the euro. Let's say you wanted to exchange the Deutschmark for the US dollar. It was done at a fixed exchange rate. Well, after 1971, after that move, now everything's a floating exchange. With geopolitical events is usually what moves the value of a currency. Before it was fixed exchanges. Even if other currencies wanted to exchange among themselves, the dollar was still the reserve currency backed by gold. Even still to this day, the dollar is the world's reserve currency. You couldn't be able to trade, import, export certain things without having the US dollar involved. So that kind of solidified, us as to be an extremely powerful nation for a very long time, and we still are. We still are. But this is what other countries right now are starting to undermine because they're like, hey, you know what? U.S. got all the power. We got to make these moves to make sure that, they're not the center of the world anymore, right? They're not the backup currency, that's supposed to be backed up by gold. Fiat currency is supposed to have the faith that somehow, these currencies are backed by gold. Now there's moves that's about to be set that will definitely have certain currencies backed by gold, and the U.S., the U.S. is going to have to basically eat that up, or it's going to have to be a whole lot of political negotiations to avoid that, because that's one of the things that I know alarms the rest of the world. If a currency is actually going to go back to gold standard, because that will make them the most powerful currency, right? But anyhow, we spoke about all these different things, and today we are going to cover consolidation versus trending. All right, how to identify each of them and what's the best ways to take advantage of them. So again, we're going to go through all the basic stuff before we get to all the advanced MMC stuff and smart money concepts, was basically institutional trading. We're not going to cover that yet because this is something that, to me, in my opinion, is a little bit more advanced. If you understand the basics first, then you'll get the more advanced things later. So we're going to go with the super basics, the same way how I learned before we start getting into all these different advanced topics. So we're going to talk about consolidation and trending. Now, when we are looking at different currencies, I'm going to choose Euro USD for this example. Okay, when we're looking at these different currencies, we see all kinds of different things. We'll see when the markets are trending and when the markets are basically staying within a zone, zigzagging up and down within a zone. We could identify, what's going on there. And so there's different methodologies that, you'll have a contraction expansion to explain consolidation versus trending, right? Contraction is basically the money staying within a range, which is basically consolidation. Expansion, when the money is starting to move, starting to uptrend or whatever the case may be. Accumulation, distribution, some of the same concepts. Supply and demand. So you're gonna have all these different consolidation concepts and all these different trending concepts, but we're gonna keep it very simple. Our job isn't to make it complicated. Our job is to make life just a little more simple. Okay, let's go to the 1 hour. So let's see if we can get some quick picks on trending and consolidation, which I do see. For example, here's a rock solid downtrend right over here. Boom. Here's an uptrend right over here. This is very solid. This looks to me. Let me see. Let me look at the angle real quick. All right. Usually a sharp trend is at a 45-degree angle or around there. And this seems to be pretty tight right over here. Okay. Yeah, that's pretty tight right there. Example of an uptrend. I mean, we have several examples. It's probably one of the smaller ones, but all right, 43 degrees. Usually 45 is a very sharp one, but it's going to stay within these ranges. Some trends are sharper than others. And some is not as sharp. But as you're going to see, the market is basically consisting of trends within trends within trends within trends. And just like the properties of a support and resistance line, a lot of times support could become resistance, or resistance could be some support. The same way how when we look and study trend lines, we can see that sometimes price will get out of these trends, but then retest these trend lines on the opposite side, and then it'll deflect off to the other direction. We see this time and time again. So it's a break and retest kind of a thing that goes on with trend lines, as well. This is basically, the market in a nutshell. It's going to be trends within trends within trends within trends. But there are these moments of consolidation where you can take advantage of short-term movements as long as the market is basically zigzagging within a zone. Let's pinch this down over here. Okay, look, let me erase this one right here. All right, here is an example of consolidation. Right here. Not the best example, but basically you're going to see that the market, whenever it's going through consolidation, is staying within a range, right? And basically what it is, it's rising when the price gets to the support of the consolidation level, and it drops at the resistance of the consolidation level, right? And then you have these other concepts like support 1, support 2, resistance 1, resistance 2. You have a lot of that, as well. And again, we're going to get into more advanced stuff in the future, but just to keep it to the basics, you are going to see moments of consolidation. Now, what is happening, right, in moments of consolidation? Well, what happens is the market is finding balance before it makes its next move. The market is never going to be a flat line, is never going to be straight horizontal line in pricing. The market is going to continue to move because it is a floating exchange, right? And basically it's never stopping, right? It's a 24-hour market and it's never stopping, all right? There's a lot of factors that go into it. The biggest one is GDP, but is also, at the smaller levels as well, at the smaller economic levels as well. It all plays a part, when you really put the pieces all together. It all plays a part as to the appreciation or depreciation of the value of a currency. All right. And so whenever you see the market in the consolidation zone, okay, whether it's a small one, whether it's a big one, etc., there are ways you could take advantage of it. So, for example, if you marked up, a support, and the market is always testing that support and jumping up, well, that right at that level, you should be looking for a buy. Are you going to buy at that same exact level? Well, most beginners do, but as long as you're within 5 pips of that, you'll be good to go. So, how can you actually measure? These pips, so on and so forth? Well, you can use the measurement tool, okay? So you see this right over here on the left-hand side, the measure tool, you click on that. And if you know that this is going to be a support level, then what you can do is you can literally, within 5 pips of that, maybe within 10 pips of that, just get in at any, basically get in that zone period within 5 pips, okay? Because nothing is gonna be perfect, and that's one of the things that I had to learn myself. I always thought, well, man, the market seems to be rising right over here, seems to be falling right over here, but when I see the market coming right back to it, it's not going exactly there. So how can I actually enter the trades if the market isn't doing what it's supposed to be doing? Well, here's the thing. The market is very imperfect. So everything that we're teaching, all right, you have to think of it in terms of zones, right? There's going to be these margins of error, right? Because if everyone have access to the same chart, most likely there's going to be a lot of orders coming in these set areas, right? And then, those retail traders are going to be, prone to get stop hunted again, which we're going to talk later down the line. When the institutions start to trade, they start stop hunting, which means they're going to be collecting equity for themselves. Because essentially what the Forex market is a decentralized market. Okay, it's not a centralized market; it's a decentralized market. The banking institutions, the hedge funds, a lot of these major financial institutions, they're the big dogs, they're the big sharks, because it's not about how many people you have trading. We could have 1 million traders in the foreign exchange market right now, which we do. We have way more than that. But it's not about how many traders are trading. It's about how much volume is being put into the market, right? So if it takes one hedge fund company to bring in billions of dollars worth of volume, right, to make moves in the market, they're definitely gonna move the market. They're market movers. Whereas us, retail traders, we do not have that power. It's a big game of tug of war between the retail traders for the most part, but when institutions come in, they're coming to collect, and it is what it is. They got the money to do that, right? There's only one thing that could beat the major financial institutions, and that is geopolitical events at the end of the day, right? So if there's going to be if there's going to be a policy, right, that is going to set the movement of a currency to depreciate or appreciate in value, it doesn't matter what the financial institutions are going to do, because that's only a temporary solution. So their goal is to get in and get out, with the bag. The same way how our goal should be to get in and get out with the bag, because at the end of the day, Big Brother, right, the governments of the world, they are the ones that are, setting these policies. They are the ones that are making these deals. They are the ones that are, dealing with with these economies, all right, between each other, at the highest possible level. All right, so a private hedge fund, ain't really gonna have all that power unless there's some inside trading going on, but that's illegal. Only government officials can really get away with that. But that's basically what it is. Our goal is to get in and get out like if it's a money heist, right? So if everyone is watching the same levels, there's going to be a lot of levels. I mean, there's going to be a lot of people going in for buys at a support level, a lot of people going in for sells at a resistance level. And so, you don't want to do exactly what the rest of the retail traders are thinking of doing. Okay, you want to stay within 5 pips of it. So again, think of everything in terms of zones. Okay, I hope that is going through your head clearly. And so again, let me draw this out. I'm gonna bring out my little drawing tool. Okay, so when the market is consolidating, this is what it's doing. Damn, I can't even see. It's like a little delay over here. Okay, so consolidation is basically when the market is staying within a zone. All right, so here's the resistance. Here is the support. So remember, resistance is like the ceiling. Okay, and here's support. This is basically the floor. All right. And so how to take advantage of that is you obviously want to buy low, sell high, right? But again, there's a lot of these things at play. And you do want to stay within 5 pips. Okay, you want to stay within 5 pips of these zones when you are placing these orders, because everyone else is looking at the same thing. So again, we'll get into the advanced stuff later, but you're going to be prone to get stop punted if you're doing things at exact levels. Now, when institutions trade, they tend to trade right at even levels. Okay, institutional numbers, which you will learn about later. But for the most part, this consolidation. You want to buy at the low points, you want to sell at the high points. That's the idea. That's the gist. But everyone is thinking the same thing for the most part. Now, when the market is trending, all right, in trending conditions, the market is going to be moving up. It is never going to be straight. It's always going to be like a zigzag. All right, it's going to zigzag up, or it's going to zigzag on its way down. Okay, so this is when the market is trending. This is when the market is in consolidation, right? Same concept. Concept is to buy low on the way up, sell high on the way down. Are these the best opportunities? No, but they're secondary opportunities in my opinion. The name of the game is to really buy low, sell high for real. So when the market's already trending up and it's been up trending for a minute, if you try to get in and buy late into the uptrend, there's only so much wiggle room for success. Same as when the market is trending down. If you're a little late to the party and you're trying to ride that wave, you're trying to surf down that wave, right? There's not going to be much wiggle room for success when you're late to the party, when you're late to the trend. So how can you really get in the beginning? There's a couple of different tools that you could use for that, and I'm going to be teaching strategies on trending, and I'm going to be teaching strategies on consolidation. But as long as you get this simple concept, this is going to help later on down the line, right? So, for example, in this consolidation zone, buying over here would be ideal. Selling over here would be ideal. All right. But a lot of people are thinking of doing the same exact thing. You have little levels that we haven't marked up, and you're not going to be perfect with your markups because, again, you have to embrace the imperfectness of the market. You have to think everything in terms of zones, so on and so forth, right? Because nothing is going to be at a direct right at a accurate, perfect number. It's not going to be like that, but you do have to be aware of how the market, is moving. There's going to be moments where, hey, look, it came out of the consolidation zone just to test the next resistance, and then it's going to come down, and you think it's going to test this as the new support for a new consolidation zone, but oops, look, it broke that, and it ended up breaking past the consolidation zone support just to test another support, kind of like what it did over here, but reverse. And look, now it's testing this new level over here. Okay? And you're going to see breaks, you're going to see retests, you're going to see all that, right? But the market is going to be showing, opportunities, okay? Now, a lot of times trending does happen when there are economic events, right? That when we do our fundamentals, when we're taking a look at the economic calendar, again, there's going to be some movements in the market. There's some traders that don't trade until they know that there's a news update about to happen. Okay, so let me erase this. All right, and let us look into Forex Factory. Forex Factory is one of the OG economic calendars. And so there are 3 types of analysis. What we've been doing mostly is technical analysis, right? This is technical analysis where we're looking at the candlesticks, we're looking at the charts, we're looking at the data, right? Fundamental analysis is when we're looking at the economic calendar and we're using that as a reference. Now, we don't know what exactly is going to happen until the market actually does an impact. And we'll know what happened based on the actual data. So what's important to understand, especially when it comes to viewing, on the economic calendar, I'm bring out my drawing tool again. And let's put this, like this. Okay. And so when we're doing fundamental analysis, right? When we're doing fundamental analysis, we are taking a look at the economic calendar. All right, we are taking a look at the economic calendar. All right, Forex Factory is an OG economic calendar site that a lot of us used for a long time. There are way more economic calendars out there, different websites out there. This just happens to be one of the OG ones, one of the original ones that I started off using, and it's still a go-to for me till this day. Let me fix up this this arrow. There we go. Okay. All right. And so fundamental analysis is when we're looking at the economic calendar. Now, let me switch the colors on this real quick. Let's go with red. All right. And here's a couple of things to watch out for. Okay. Number one, you want to make sure that you are paying attention to the day, right, of these economic updates that's supposed to drop at these times, okay? So you take a look at the date, all right? And these are the times right over here, okay? These are the times to watch out for. So pay attention to the times, right? Previous data doesn't really matter unless you're deep, economic, economy analysis, analysts, sorry. That really doesn't matter. Previous data doesn't really matter at all, really. What matters what really matters is the forecast data right over here. This is what matters. What is forecasted? Now, when we're looking at each of these updates, we're going to see what was forecasted. And here is when we know what direction the market is most likely going to go in. Okay? If the actual data is different than what was forecasted, that is what's going to move the markets. So when we look at this is a neutral number, right? Because the actual data was very close to what was forecasted. This is not going to move. All right, this is not really going to move the currency, okay? Now, when we're looking at the actual data and you see that it is red, okay? When you see that it's red, this means it is bad. This is a bad impact for that currency. Okay? Now, when you see that the economic data is green, okay, so when the data actually releases at this time and you see the actual data is green, this means it's good for that currency. It's a good impact. All right. So that means there's a good impact for that currency. Okay. So if it's black, it's not going to move. Okay. So if you see it, all right, if you see that the actual data is black over here, it's not going to move. Okay. Let me actually erase that because I'm pretty sure there's probably someone going to be taking a snapshot. So I'd rather it be a good snapshot. 1 second. Let me rewrite this, but in a neutral color. Just in case you're going to take a snapshot. All right. Let's do a highlighted black right over here. Boom. Okay. All right. Now let me switch it up. Actual data. All right. It's not going to move, but, let's just put neutral. Okay. Here we go. That's a little better, right? Let me hook this up for y'all. All right. Let's do the highlighted black. Okay. Okay. So important things. All right. Today's date. All right. And the time that you're looking at. All right. And what's forecasted and actual data. All right. You use these as, references right over here. Now, now that you know, okay, the actual data black is neutral, actual data red is bad impact, actual data green is good impact. How do you know the strength of the impact? Well, the way you know the strength of the impact is through these folders. So if it's yellow, okay, yellow folder, all right, means that it is a low impact. Orange is a medium impact, and red means it is a high impact. Okay, so this is how you know the strength of the impact of these trades. So let me write this down for you here. Okay, so red impact. All right, is high. Okay. Orange impact this is a little thick. All right, orange impact is medium. And yellow is low impact. Okay, so just one of the things. All right, real quick, let me change this back to white. One of the things to understand is that most people are looking for the red impacts. Okay. Most traders seek out red impact updates. All right, mostly Forex, right? Because this is an opportunity to gain more pips. For those of us in binary options as well, even a low impact update will be significant enough for us to want to win our trade. So how does this work out? How does this all make sense together? Well, the way this makes sense is simply this, right? If I am actively trading and I know that there's a low impact update about to happen on a currency pair within a matter of a couple of minutes, then as a binary trader, what I would like to see is I would like to see the impact hit first. And once I see the actual data, and once I'm looking at the technicals to see how it's reflecting, right, then I'm going to want to go with the flow. Always remember this, the trend is your friend until it bends. Even if the market is not trending and you're just going with the flow, that's cool. All right, go with the flow. And remember, if it does get to a point of trending, your trend is your friend until it bends. Okay, so keep that in mind. All right, when the trend bends, that means it's the end of a trend. You already know what's most likely going to happen. If it's a downtrend that hit a support area, then, price is going to start to go up. If it's an uptrend that is hitting a resistance area, price is most likely going to test that resistance area and then go down, or maybe not even go down, for a downtrend, but just down a period because it's about to test a newer layer for consolidation for a while before it continues on the direction it was going. So remember, higher time frames is stronger confirmations. Lower time frames is it's confirmations, but not as strong as the higher time frames. Okay, so you can take advantage of short-term opportunities on the lower time frame charts, but the big time frame charts is really where the big moves are going to be made. As a binary trader, we're good with small moves. We're cool with small moves because if the market is just a micro pip in the direction that we predicted in, by the time expiration, we good to go. For Forex traders as Forex traders, when I'm Forex trading, my goal is to collect as many points on the profit side as possible, right? And so I would seek out the red impact updates. Even for those of you that are trading stocks, stock options, so on and so forth. You're going to want to seek out red impact, updates. And there's different news sources for different things, different drops for data that's going to impact the market. So, for example, Forex Factory is the OG. However, you can literally, if I go and I decided to click on this, okay, I can actually look at crypto updates. I can look at metal updates. I can look at all kinds of different things. Go into the coins, right? We could look at the market caps. All right, I'm going to clear the screen right now. We can look into the market caps of what's happening. But of course, there are specific websites if we are gonna go fully on crypto trading. Okay, so one of those being coinmarketcap.com, and we can literally use CoinZoom to do our trades from one crypto to the next. We can use CoinZoom for that, which you can find right over here, mineonbillions.pro. Hover your mouse on binary FX and click on CoinZoom, and boom, now you have a crypto exchange that you can log into. So we go in here, okay, we put in our information, we'll be good to go there, and now we can actually exchange crypto day trading style, okay? So, news updates are very important, okay? This is fundamental analysis. So as long as you combine technical analysis with fundamental analysis, no matter what trading you're doing, and you're pretty familiar with technical analysis and fundamental analysis, you will have an advantage over most people that don't know about any of this stuff. So in my opinion, and I can say this as a trader that really, I did my thing with binary. Because binary, you have to be so specific with your entry, and you can win or lose based on a micro pip. If you can become a beast with identifying entries as you do your technical analysis, that's really an incredible skill to have. So as long as you could understand risk management, identify entry opportunities, you have a good gist of technical analysis, you're also looking out for economic data, you're looking out for news updates. So stocks is company updates, crypto is coin updates, Forex is economic updates with the different currencies. As long as you do that, you have an advantage for trading stocks, Forex, binary, crypto, and any other thing you wish to trade. It's not going to be a hard adjustment. There's going to be some minor differences here and there with the execution on how you trade when you trade different ways. But as long as you have technical and fundamental analysis down packed, along with risk management and seeking out entry opportunities, you're good to go. Okay, in the last video, I showed you how you can use the long and short position tool to identify stop loss and take profit. Well, guess what? You can actually trade crypto, okay, through Forex brokers using stop loss, take profit. If you want to exchange it CoinZoom style, or if you go to coinbase.pro, it's going to be, exchange style with crypto. You will be able to identify good opportunities for that as well. Stop loss, take profit, and identifying entries, keeping risk management in mind, and fundamental analysis, technical analysis, you're good to go. All right, so trending and consolidation, just going back to what we were talking about earlier. Okay, market is consolidating. There are opportunities you can take advantage in. All right, when the trend starts to bend, most likely it's going to go into consolidation mode. All right, you have different concepts like contraction, expansion. Okay, and you don't have to look. You don't really have to look far, right? What is AI that everyone can use with no problem? Gemini.google.com. It used to be called Google Bard, but it's Gemini now. Let me see something. Okay. So here's an AI that everyone could tap in with. It is Gemini. All right, and look, let's talk about contraction and expansion with Forex. All right, and you can literally use AI, to your advantage, because unlike a typical Google search, this is something that's unique to you and your search. So you can literally order it, things, and it'll do it for you. So contraction, this refers to a period of consolidation, all right, as I mentioned, where price movement is confined to a narrow range, right? So it's kind of boxed in. It is often seen as a period of indecision in the market, okay, when the market is trying to find balance. Remember, he's constantly telling you, with neither buyers nor sellers are able to establish dominance. As I said earlier, Forex is a game of a one giant game of tug of war, right? It's the buyers versus sellers, the retail traders among each other, playing tug of war. But the biggest movers are the big financial institutions. So when they're ready to pull on the rope, they're going to take everyone else out the game. But what's bigger than them is the actual geopolitical powers that enforce policies that private financial institutions just can't do anything about. But what they can do is watch, look at what people are going to be doing, and stop hunt, which means they're going to collect their bread, knowing that most people are going to sell over here, they're going to buy right there. If they know most people are going to buy at a certain level, they're going to sell right there. They're going to collect their bread in the market. Okay, so look, use AI to your advantage if you have, questions that doesn't make any sense to you. But yeah, contraction, expansion. Expansion is, basically when the market is getting out of the little narrow box that we call consolidation. That's really what it is. So the market is either trending or consolidating. Either way, there's opportunities in both. There's gonna be times where you're gonna have to adjust your position. So let's say the market was trending, right? And you got it in the buy while the market was up trending, and oh my gosh, it's not trending anymore. Now the market is going the other way. Now, what do? Are you going to stay loyal to a losing position, or are you going to cut your losses, right, and then adjust yourself so you get into a better position in the market at the time? That's the best way to do it. Adjust. Champions adjust. Champions adjust to changing situations in real life. Champions adjust to changes happening in business. Champions adjust in investment opportunities. Same thing when it comes to trading. Champions adjust, right? Don't be loyal to a losing position. Don't revenge trade, which we talk about later. That's more market psychology. And just, be mindful with your risk management, and just don't be afraid to cut off losing positions. And for those of you that may be upset, because you saw a potential opportunity that was about to happen and the market went right where you thought it was going to go, and you was waiting on that buy or you was waiting on that sell, and you missed it, and the market did exactly what you predicted it doing, don't get upset and get into that trade late. A missed trade is better than a lost trade. Okay, but we'll get into more of that when it comes to market psychology. All right. So yeah, we cover grounds with consolidation and trending. If you look at the last video, we covered trending a little bit more as well. But now In the next lessons, what we're going to go over is we're going to cover more of the drawing tools. And then after that, we'll cover the indicators, right? The most used indicators. And then we'll go even deeper and cover even more indicators. And then after that phase, we'll cover strategy. So we'll all do that in timing. So tune in tomorrow, 11 a.m. Eastern Standard Time. I'll start early tomorrow. So be prepared, take notes, all that good stuff. And I will see you on the next lesson. All right, let's get it. This is an exciting thing to learn. Incredible opportunities that will be presented itself. So, remain a student always. Pay attention, stay excited, never quit. There's a over $5.3 trillion a day market. The market ain't gonna sleep, neither should you. And with that said, stay blessed and